Okay, we continue. Thanks for being with us. And over the next 40 minutes, we are going to learn about an alternative to the traditional initial public offering with a panel brought to us thanks to the collaboration of Euronext. We welcome Susana de Antonio, Head of Listening Spain at Euronext, who is going to moderate the panel with these experts. They are Sara Secal, Inverready partner, Carls Domenech, CEO of Ability Pharmaceuticals, Maite Malet, investment associate of Asabis partners, and Raúl Insa, he is right there, CEO in some Biotech. Thanks to all of you, and it's your time. Thank you.
Thank you. Thank you for the introduction, and welcome everybody. Good morning today, and thank you for joining this panel. I think it's, I hope it will be interesting for you. I think we have a very talented and good experienced speakers today, and we would cover the topic of IPOs as a way of fueling the growth of biotech companies. I will make a short introduction of all the speakers. So first we have Maite Malet, is an investment associate at Asabis, venture capital firm investing in healthcare with 12 portfolio companies and 86 million of assets under management. At Asabis, she's primarily focused on supporting the health tech portfolio, as well as sourcing and assessing opportunities from the financial and business development perspective. Prior to Asabis, she held business development and strategic roles as Sphera Global Healthcare, Anti Venture Builder, and Deloitte Corporate Finance. And she holds a bachelor degree in international business from the Universitat Pompeu Fabra and the University of Florida, and a master's degree in digital marketing by ISTE. Sara Secal, next one, is a partner at Inverready and responsible for Inverready's life science portfolio. Sara has a bachelor in chemistry, Universidad de Barcelona, a master in science by the Indiana University, and an MBA by the London Business School. She has built a plus 20-year career in venture capital and technology transfer in energy and life science, both in North America and Spain. Inverready has a portfolio of 140 plus technology companies, 30 of which are in life science. And they have, well, Sara has experience in recent IPOs and exits, including Edesa Biotech and Avithorex through IPOs, both of them. And then Carles, next to me, is the executive chairman and CSO of Ability Pharma. He co-founded the company in 2009 and has been running it since then. Carles holds a PhD in biology from the Autonomous University of Barcelona and has additional business training at ESADE Business School. After 8 years in cancer research, CSIC Barcelona, MSK, CC New York, he has developed over 35 years career in leading positions in the pharma and biotech industries, including business development and licensing and venture capital positions at Almiral, Lacer, Axio, and BCN Empren, etc. And he's also a board member at Acebio. And then, last but not least, Raúl Insa is the CEO of some Biotech. He has more than 30 years experience in multinational pharmaceutical companies, such as Park Davis, now part of Pfizer, UCB Pharma, Uriac, and Isdin, and working on drug development from drug identification to commercialization. He received his medical training and his PhD in clinical neurology at the University of Alicante, an MBA from ESADE Business School, and executive education programs from IESE, and Harvard Business School in Boston. He has produced more than 45 publications and papers, 7 chapters in books, and 87 Congress communications, and 12 pharmaceutical patents. So as you can see, we have a great panel today with high-level speakers. I will briefly introduce myself. My name is Susana de Antonio, and I'm the head of listing activity at Euronext in Spain. I joined Euronext 4 years ago in order to open the office in Spain and to promote not only Euronext, but the option of doing IPOs as an alternative way of financing the growth of innovative companies. Before that, I had 16 years experience in private equity funds, both domestic and international. And very briefly, for those that are not maybe very familiar with Euronext, just a few words on it before starting the discussion. Euronext is the leading pan-European stock exchange operator. Currently, we run the markets of Paris, Amsterdam, Brussels, Lisbon, Dublin, Oslo, and Milan. And we have always had a focus, very active focus on tech companies and SMEs. And as part of tech sector, of course, life science and biotech is one of the most relevant segments that we cover. And we have around 130 life science companies listed on our markets. And during the last 2 years, it has been very active years for this specific segment. And 11 new companies have joined, life science companies have joined Euronext in 2021. And these companies already listed on Euronext have raised as a form of follow-ons with capital increases close to 2 billion. So we are quite active, and there is a lot of activity, a very consolidated and active investment portfolio in our markets. And one of the things that we do to promote IPOs is to organize every year a program, a pre-IPO program that is called TechShare. And it's very focused on tech companies that may consider do an IPO in 1 to 3 years. And it's a program just to educate and to explain how the IPO works and the implication that it has. And we are lucky today because both Carles and Raúl attended this program in the past, so now they have quite a lot of insights regarding the IPO program. So let's start with the discussion. And so the idea of today is to go through the IPO option, also compare maybe to other alternative ways of financing biotechs. As you may know, the IPO market has been very active in the last 2 years, and more specifically in the health segment, also due to the COVID and the pandemic. People is more concerned about health, and investors are willing to dedicate more resources to it. So there is a very good and very active ecosystem now around IPOs. And so maybe to start the discussion, and as I explained that you have been interested in both options, maybe if we can ask Carles and Raúl, both of you have gone through very different financing options, probably with, I don't know, with some crowdfunding, family offices, venture capital. So why now you may consider an IPO, and what do you think is the good evolution for a company, for a biotech company to finance themselves and probably end up with an IPO?
Yes. Okay. No, first of all, I wanted to explain a little bit what has been the funding history of our company. Because in previous sessions, we have seen typical biotech companies that have a seed capital round, and then the Series A with the participation of biggest venture capital firms, then maybe Series B. So the typical venture capital track that leads to or either a trade sale or a merger or an IPO. No? In our case, we have, it has been by different circumstances, we have not followed strictly this path. Of course, we have had venture capital. We have invested ready almost from the very beginning. But during these years, we have had a lot of access to non-dilutive money coming from public institutions like CDTI or ENISA or the RETOS and Impacto and RETOS program of the Ministry of Competitivity. Of course, we have always been complementing this with new investments from the founders, from our financial environment of friends, family, and fools. And also, we have done a couple of crowdfunding campaigns, but always balanced with qualified investors and with the support of our venture capital, also the validation given by this public funding. And in the last year, we went to a big milestone when we got close to 14 million euros in one year in a combination of private money, crowdfunding, venture capital, also technological partner, but also we got two big grants. One grant from the FDA, so based on technical results, of $2 million, and also an EIC accelerator from the European Innovation Council of 5.2 million euros in a mixed format of direct grant, I mean, completely non-dilutive money, not loan, and also the investment in equity of the EIC fund in our company. So with this strategy, we have been able to bring our main asset from the, not preclinical, from the university to preclinical development, phase 1 clinical trials, phase 2A clinical trials with very positive results. And now we are starting the new trial that is validation trial, is the phase 2B, the one that is financed by the FDA and Europe, and also our investors and venture capital. And with this, we are in a moment that we are getting close to some sort of exit that can be in different ways. One is the licensing agreement, or going into the stock market in order to add additional value to the asset before licensing it. With the phase 2A results, we can get a partner, but it's not a controlled trial. So the value is still at this level, let's say a mid-level. But if we are able to gather 25 million in some way, with additional 25 in 1 year and a half from now, we are going to put our product in a position that really will provide us with a really very, very attractive licensing deal with a big upfront payment. So we have to find the balance whether to license now or to gather these additional resources. We could go to do a typical Series B with venture capital. But in the stage of development of our company, it would be to enter again to a round of VCs for several years. Yeah. So maybe the best option, and it's on the table, no, is to do an IPO in a market that has liquidity, no, a market that has liquidity and that allows that in a year and a half from the first, from the initial public offering, to gather additional resources to continue with all the program. No?
Yeah. Yeah, no, absolutely. I think it's a nice strategy, and normally markets, that's something that allow that the company not only finance itself at the IPO, but also on a recurring manner when they need it.
Yes. And what I wanted to add is that really, when we were selected to participate to the TechShare program, really this opened our minds, you know, because, okay, you are working on the day-to-day, you see the typical track, but really to see the risks of doing this, no? That really was a very good program.
Good to hear that.
Thank you.
And what about you, Raúl? Maybe what's your view
Yes,
and your experience?
Good morning, everybody. Well, first of all, thank you very much for the introduction, Susana, and to my colleagues in the panel. Sorry for not being physically there. Okay. I'm not going to talk very much about our experience, just a little bit, but why we consider that an IPO may be good for a company, that depends really on the company, what type of company is it. If it's only one asset, one product that is going to be out licensed, so the exit is very clear for investors, maybe IPO is not the best way. If it's a company like ours that are based in a platform of artificial intelligence technology to discover new activities of drug in a popular area like rare diseases that is pretty much known by the general population. And you have around 5 assets in the clinics. We have 2 assets in phase 2B, 2 other starting phase 2A proof of concept, and another one in phase 1 with 5 preclinical assets, and all of them are in different indications of rare diseases. This is a broad pipeline that you have to fund. In order to fund it, you can, of course, go to series B, C, D, and that's possible. But we think that there should be reasons that are not only for funding of the company, but also a kind of social responsibility. You know, you may have give the opportunity to the people to invest in a long-term company that is trying to bring a drug to the market for rare diseases with very advanced assets. And that's why, at the end of the day, it's a board decision of the company to decide what kind of investment that they want to grow the company, because shareholders may have usually two visions, you know, short term, usually the VC position after 5, 7 years that they have to exit. So you have to give an opportunity to exit, and that's good through a market where there is, as Carlos said, enough liquidity and a good price. That's another thing. Or you may also give value to those investors that are more long-term investors. They are not in a hurry. They want to be part of a company that grows, gets bigger, okay, and the value increases. Okay. If you mix that with visibility, which is something that unfortunately in Spain, as we have seen in other panels previously, there is, I would say, still very lack of visibility of the biotech companies that you have in the country. Being listed in international markets give us more, sorry, more visibility to investors, to companies, and to the world in general. So that's why this is a part of this social responsibility. Okay, that I think it's good to grow the country as well. So these are the main reasons that we put on the table in order to analyze and to evaluate and validate this as a very potential, interesting way to grow.
Okay, thank you, Raúl. And maybe now from the, let's go and see the point of view of the VCs. How do you see and when do you believe a company is ready for an IPO, and in which cases you recommend this option compared to a trade sale or licensing directly, etc., or doing another financing round? I don't know, maybe Sarah, if you want to start.
Or I think, welcome everybody, and just a little clarification. You mentioned Avisorix went through an IPO. Avisorix actually was acquired by a company in NASDAQ. So just a little clarification. When is a company ready for an IPO? For biotech companies, I think you have to have gone through a series of funding that have put you in a position where you have, you're at a value inflection point. That's step number one, which for therapeutics, I would think is basically being close to a human proof of concept, or having completed a phase 1A, that spot, I would think. And the second thing that you have to think as you look at your options, and in my particular case, I think you, as a biotech company, you always want to have your options open. You have to be ready to come into a market that will be short-term focused, as opposed to being long-term focused before you start trading. So if you've had the traditional VC, friends and family VCs, maybe a couple of rounds of VC funding, and you're now ready to explore an IPO as a way to finance yourself, you have to think that you will be changing your pool of investors. And whereas VCs are long-term focused, public investors will be short-term focused. So you have to have a stream of news that you can project through time, and that can come in different ways. Maybe you have a platform technology, you have several clinical trials going on, or so on, if you're a therapeutics company. If you are a company that's in healthcare, that's a totally different story. It's a lot closer to some of the other high-growth companies in, say, telecom or so, where you have to show a story of growth through acquisitions or where have you, and at least a short horizon to being profitable, I would think, in a nutshell.
I think the three panelists have mentioned, I think, what you need really to target an IPO. For us specifically, it makes a lot of sense for those companies who have platform technologies and who have a pipeline of products that are going to need a lot of cash and a lot of capital to support them in the long term. And this is something that only the public markets can really give you, and big institutional investors with deep pockets. Also, for us, it makes a lot of sense for companies that are in a stage that need some kind of recognition, probably, to be able to attract more talent that has done this in the past or that has worked at great, successful public companies, to get to the top key opinion leaders, to have good board members at the company that's going to help you. And also to be able to close specific transactions with corporates that otherwise, being a private company, you're not going to have that access to. So for us, it definitely, I mean, both for biotech companies and also our health tech portfolio, that could happen at the same time.
Yeah. Yeah, no, and also listening to what you said, I think probably you position it, an IPO, not as an exit route only, but as a way to increase value and to allow the company to have access to that additional funding that otherwise will be very difficult to raise, because you would need to involve or incorporate other funds. So it's more like a way to continue, let the company grow rather than exit and divest. No, I understand that in the
I would think so, and it depends on where you sit on the cap table of a company at a given time, right? So if you're a large investor at the IPO, an IPO is definitely not an exit point for you. It's maybe a beginning or a first step to an exit, if you will. It opens opportunities. It gives the company more visibility, so it will be more likely to conduct an M&A transaction. So it's visibility and ability to raise funds more than a clear path to an exit. If you're a small investor at that point, that's completely different. You might have a liquidity event close to the IPO, maybe not at the very beginning, but after a lockup period or so. So I would qualify it as a first step to liquidity event.
Absolutely. And so, thinking about it, and it looks like an IPO could make sense for many companies, but
Sure.
It's true that in the Spanish market, we don't have so many examples. So what do you think it's the reason for that? And that's open for everyone. It's lack of information, lack of relevant examples or case studies, or what do you think?
Well, I think that what's the main obstacle for companies like ours is that we are companies that we don't have revenue. We only spend money because we are adding value to our main assets.
Yeah.
No? And so to go to a continuous market, you have to have a guaranteed turnover. Maybe it's through a licensing agreement that you have signed, or, well, there are different ways. And then the option is the it has always been the VME growth, I think. And traditionally, for drug development companies, it has not been an option. It has been more for companies that have a turnover. So there is this lack of culture of investing in companies that are just investing in the asset.
Yeah.
But then there are markets where this is not happening. One is, of of course, Euronext growth, no? And also, of course, NASDAQ or AIM, that has a longer history. But well, so far, they are abroad, so maybe there has not been it has not been easy to go through this path. I think it's very, very good that you are here opening the windows, no?
Yeah, no, that's, yeah, that was part of my job, yeah, explaining that, yeah, there are other markets, and in the case of Euronext, we have many biotech companies with no revenues, but that are listed and have been able to raise a lot of money to continue developing their clinical studies. I don't know, maybe Raul, you have
Yeah,
something to add?
I totally agree with Carlos that this is one of the main factors. The ground in Spain is not prepared for biotechs. If in the economical fields, the banks, regulators, or whoever does not understand that biotech companies usually do not have a turnover and revenues, that it's an investment for the future, then it's very difficult to convince the ecosystem on that. That's one of the main reasons. Probably that's one of the reasons, but you can elaborate on that later, Susana, why Euronext has not the Spanish market open, okay? You have to go to Paris, to Brussels, to Amsterdam, to Dublin, but Madrid is not possible. And probably it's because of that, okay? It's because the ecosystem, unfortunately, is not prepared because of lack of companies there. But of course, if it's like, no, you have to start from one point. But I think there are two other reasons, okay? And one reason is, yes, if you see that Spain is not the best market to do that, then you go out. And when you look out, there is NASDAQ and Euronext in Europe, and of course you can go to Hong Kong or other places for sure. But you look out and you look at Euronext and you see, okay, where is the best market that do understand biotechs, to understand what we do, and to have a network of investors specialized, and that's probably Brussels or Paris and nothing else. Okay, so if the markets are not here, we go out. It's a pity, but it is how it works. And the third point probably is because of the lack of talent. Spain has a very huge and good talent in science, a lot of universities, publications, very good standards. But in terms of people specialized in getting companies public, it's not the case, and not at all in biotech. Okay, so you have to hire people from out of Spain. It's more difficult, more expensive. You have to spend a lot of money on something which is not on your assets under development, and that usually is a conflict of interest on when you allocate the resources. And for me, these are the main three reasons.
Yeah.
Okay.
I think it's also a reason of market maturity, and I think this is coming. I feel we're 3 to 5 years about to get there, because I feel like we don't have enough access to capital, and this is true in Europe, and specifically smart capital. And what I mean by smart capital, that is funds and institutional investors that understand the healthcare space and the biotech space, so that are ready to commit this large amount of monies and take core positions in public companies to be able to support them long term. And I think this is one of the reasons. Also, there's some market fragmentation in Europe. We have 15 different stock exchanges, and companies, usually 90% of them, go to their local stock exchange to do the IPO, right? So I feel that at some point this also spreads the money even more, whereas in the US, in general, NASDAQ captures most of this market, and they have all this access to capital that for companies here, it's tough. And as Raul was mentioning, most of our biotech companies here are in preclinical stage, probably, and don't have these teams with expertise doing this before. So I feel like as more and more VCs invest in early stage and help these companies hire top teams and be surrounded by top experts, these companies are going to be able to get to IPO in Euronext. And I think the potential is there. We just need a bit more of resources.
I would make two additional points, because I certainly agree with everything that you guys have said. market maturity is one, and I would make that a positive. I would turn that into a positive. I've been in this space for 10 plus years, and I've seen the pipeline change. And when I mean the pipeline for therapeutics, I've seen it change for the last 10 years from being a preclinical to having quite sizable amounts of clinical assets. Eh, And I'm talking Spain's pipeline, if you will. So I think we're poised to a different spree as far as IPOs and so on. Also, the markets are more eager to invest at this point with low interest rates and what have you. So that means that there's more capital available right at a great point. And if we are successful now with this first wave of potential IPOs, which I see coming, at least in our portfolio, but certainly in Spain's pipeline, I think we're poised to a successful IPO and a deafening market as far as financials or financial investors coming into this market. The second point I want to make is we focus a lot on therapeutics companies, which is okay because they're certainly the ones that have the most difficulty raising money, naturally so. But for healthcare, we've shown already that the markets work because they're no different. Healthcare companies are no different than any other growth company. And so we, for example, in our portfolio have companies that have IPO'd in different markets, and I'm thinking about Althea, who's done extremely well in the BME growth, being able to raise hundreds of millions and growing their company by acquisitions in a tremendous way. So I'm all eager to see this market grow and pick up.
Yeah. So probably it's a question of time. No, there is
I
more.
think so,
Yeah,
but we're
more-
getting to the point. I think, yeah.
Yeah, hopefully that's the case because that will be the result of an ecosystem that is maturing, that it's working and showing results. So let's see, and hopefully that's the case. So there was another topic that we were supposed to cover. It's regarding the SPAC. It is a trending topic nowadays, I think, regarding capital markets. Just a very brief introduction in case some of you are not very familiar with it. So SPACs are vehicles that are listed that without operating activity. So they only raise money with the objective of doing a business combination with an operating activity. Then both companies are combined, merged, and the operating activity is the one that it's listed as a result. So these SPACs normally are backed by sponsors that are traditionally venture capital firms. Inveredi is also working on that, and normally, or previous managers of successful entrepreneurs and people with experience in very specific segments, because normally they target specific segments. Most of them are targeting tech, a few of them life science, not so many. And the point is that in the last 1 year and a half, we have been a huge number of SPACs being launched in the US, in US markets, and we have some of them in Europe, not so much. So just for you to have an idea, in 2021 in the US, I think it's more than 400 SPACs that have been listed so far. And in Europe, it has been like 31 or 32 or something like that. And half of those have been listed on Euronext. So this is another way to access capital markets. There are some advantages, disadvantages. Probably the main advantage is that it reduces the uncertainty of the process, because when you do an IPO, you always have some uncertainty regarding the prices, the price, sorry, and also the final execution, because somehow you are also dependent on the ecosystem and trends on the market that may impact your IPO. So this way, it's just a private discussion and negotiation on the conditions of the merger. and then the process is a bit easier. Of course, as not disadvantage, but something to take into account is the sponsors that you are somehow marrying, because you are marrying with getting married with sponsors, and you need to be sure that you have a good fit and you believe they are going to add value to your business. So this is something that is on the market. Looks like now it's a bit slowing down the trend, but that's an option. So do you think SPACs, it's a good option, best option, and reduces maybe some of the risk on that, or the things that people is more aware about an IPO?
I definitely think they're an option. I don't know if you want to take
No,
it
no, no.
first,
Go.
right?
Whatever you. I'm good with it.
I I think they're definitely an option. Last time I checked, and this changes gradually, but a SPAC will have 24 months to deploy its capital. And there were around 50 SPACs looking for healthcare and biotech assets. So healthcare would include AI and what have you, but about 10 billion or 10,000 million in Europe dollars are available for healthcare and biotech last time I checked, and this changes
Yeah,
gradually,
every
but
day.
it's tapered down a little.
Yeah.
So, and that's specifically for healthcare and biotech. This is money that has already been reasoned for acquiring assets. So you have, from the point of view of a private company going through thinking of going to the public markets, that's money that's certain. It has several advantages versus a traditional IPO. One of them, I think, is key, and is most of the IPOs, you correct me if you will, but most of the IPOs for healthcare and especially biotech companies require a crossover round first. And that means a 30% discount off the cuff. With SPAC, you don't have that. You go straight to merge with a company that already has money. And if you get any dilution, you'll get it later on. It will be hopefully much less through the warrant scheme and maybe the pipe that comes afterwards. So for a small company, a small biotech company or big company, either way, because these SPACs have raised from 60 million to 800 million dollars, and maybe with a sweet spot of about 200 each of them. It certainly has some advantages from the same point of a biotech. Two of them I've mentioned. I think a third one maybe for small companies, and SPACs or the concept has been around for a long time, and maybe one of the transactions I mentioned for this panel was Edesa Biotech is a Canadian company we invested in that went to the public market via an RTO, which is a very similar process than a SPAC, only maybe a bit more messy, but basically you're looking at a shortcut really to getting to being a public company with certain advantages, as I mentioned. You know the cash that's available. Redemptions from a SPAC are about 70% at this point, so you know the money that's there for you to grab, and you know that you won't have to get all these haircuts that you go through a traditional IPO. So I would mention these two, maybe.
I mean, we see it definitely as an exit strategy for our portfolio companies, specifically for the digital health ones. I think that the tech companies have been more approached for this kind of vehicles. In the past 15 months, I think there's been already 13 digital health deals announced for SPACs. So we see it as an exit strategy, but at the same time, we're a bit scared. We're seeing it a bit from the outside at the beginning because we think there's a bit of a hype as everything in the markets right now, but especially because they're acquiring companies that sometimes they're pre-revenues, and that is some of the benefits of the SPACs, right? That you can show project the revenues that you expect in the coming 5-8 years. And they evaluate you for that, whereas in the IPO, it doesn't work like this. So it's for these companies that are just starting and are pre-revenues, it's perfect. But at the same time, we're seeing big valuations that once you go into the market, the market is going to put you where you stand. So the stock is going to start moving, and this is why we're a bit scared of the space, but we definitely believe it's here to stay. It's just, I feel like it's going to mature a little bit, and we definitely see it as an option.
Yeah.
Yeah, yeah, that's for sure. I don't know, Carles, Raúl, if you want to add something, Raúl.
Oh, yes, thanks, Carlos. Yeah, I think that SPACs are definitely a way to be a public company, which seems to be faster and cheaper. Seems to be okay. I think the main thing is that you have to fit, the company has to fit very well with the special purpose, okay, of that vehicle, because usually the vehicles are built with a very specific purpose, and you have to fit on that. Not all Sparks do like what you are doing. That does not mean, so it means that you cannot just claim for that company. And yeah, the difference between Europe and US is tremendous. So as soon as we have much SPAC possibilities in Europe, I think it will be good for everybody.
Yeah, yeah, no, that's for sure.
Not much to add on what he has said. I think I'm right now in the balcony looking at the cars passing and
Yeah.
looking, but
Yeah.
not actively
Yeah.
looking for it. But really, it has its pros, but its pros and cons. But I think that the pros are bigger than.
Yeah.
Yeah, I think it's a better option than. It's more simple.
Yeah, yeah, yeah. Yeah, no, it's the access is more simple. I think we need to, as you said, still a bit maybe wait and see how the first combinations work and how's the aftermath. When companies are already listed and merged, and how's the evolution. But anything that that can support and facilitate the access to capital markets is good news.
And I see that really the ones that are really looking at it very positively are VCs. No, really, it's what I see that it's a faster way. No, just keep actors in between. It's more direct. No, direct to the customer. No.
I think so.
Yeah.
I wouldn't be so wary, to tell you the truth. I think there are windows of opportunity. And talking about windows of opportunity, when you go through an IPO process, you have to be very careful. Not only you have to be ready, but the market has to be ready for you. Whereas here you have money that's sitting on the table waiting for you. So I think it's in the best interest of companies to at least go and check the waters and talk to these SPACs. Some of them are maybe oversized for the size of our companies here, but some of them have raised amounts of money that are reasonable enough for some of the companies sitting here to go and talk to them. So this is money that's sitting, just as you would come and talk to VCs on a regular basis. I think you do your company a service if you go and talk to some of these folks, and then see if they make sense of or not, right? Because they'll have 18 to 24, this is a window of opportunity at least now for the next 18 to 24 months to go and talk to these folks and see what they're up to and see if they're fit. They're just, as far as fundraising, they're just one more source of funding that clearly wasn't here 3 years ago.
Yes, exactly. So I think we are running out of time already. So maybe just for conclusions, ideas that I got from what we discussed. So first, that it's important for biotechs that are growing is to get qualified investors on board. That's helpful throughout their evolution. That IPOs are there not only as an exit option, but also as a way to increase value, and as a recurrent way of financing. Regarding the Spanish market, it's the market that it's maturing. Probably we will see more IPOs in the coming years, and that the SPACs, it's a very attractive way for companies and facilitates a simple option to access markets. So thank you for your contribution, and hopefully we will see many IPOs in the future, in the coming months or years. So
Thank you, Susana.
thank you, everyone.
Thank you,
And
everyone.
thank you. And
Thank you very much.
see you.
Thank you.
Thank
Thank
you,
you.
Raúl.
Bye.
Bye, Raúl.
Bye. Thank you.
Thank you, all of you. Susana has made a perfect conclusion of this session, and we stop here. We have a break. We'll be back at 12 and a half. No, half past 12 will be waiting for you. Thank you.